The cracks in America's financial foundation are becoming harder to ignore. For nearly a century, the US dollar has been the backbone of global trade, a trusted symbol of strength and security. But today, that confidence is eroding. And this isn't some distant forecast, it's happening right now, in front of our eyes. We're living through a moment that future historians may look back on as the turning point when the dollar began to lose its crown. And before we dive deeper, if you find this analysis valuable, please take a second to like this video and share it with others who care about understanding these changes. It really helps spread awareness of what's unfolding. So, what exactly is going on? Let's start with something that shocked many in the financial world. At a high-profile gathering of global financial leaders, U.S. Treasury Secretary Scott Bessent took the stage. This would normally be the time for America to project confidence, to reassure investors and allies that the dollar remains rock solid. Instead, his words raised eyebrows. He told the audience to buy American assets. To some, it sounded less like strong leadership and more like a desperate plea. And that desperation reflects a reality the U.S. can no longer hide. The dollar's dominance is slipping. Since early 2025, the dollar has lost more than 10% of its value against other major currencies. That is the sharpest decline in half a century. Investors aren't waiting around to see if things stabilize. They're rushing out the door. Here's the problem. The United States is drowning in debt. At over $37 trillion, America now owes more than the economies of China, Japan, Germany, and India combined. And instead of slowing down, Washington is borrowing even faster. In one quarter alone, the government is set to borrow over $500 billion, with nearly $2 trillion more by the end of the year. That level of debt sends a clear message to investors around the world. This is unsustainable. And so, they're pulling out. In April, foreign investors sold off $71 billion in U.S. bonds. China alone dumped $23 billion. And where's all that money going? Straight into gold. In fact, $15 billion worth of gold was bought in a single day recently. This isn't a slow, cautious move. It's a stampede. Confidence in the dollar is evaporating. And Washington's response? More tariffs, more borrowing, more short-term fixes that don't inspire trust. The trade war with China has pushed tariffs on Chinese imports to 50%. That sounds tough on paper, but it's hurting American companies too. Apple, for example, faces nearly $1 billion in extra costs this quarter. Imports have plunged, businesses are scrambling, and growth is barely crawling along at 0.3%. For an economy used to being the world's engine, that is alarming. Meanwhile, America's closest allies are also hedging their bets. Japan and Germany are quietly reducing their purchases of U.S. debt. Central banks are shifting away from dollars and toward euros and gold. In fact, almost 40% of global trade is now happening outside of the dollar system altogether. That's a huge sign of change. Now, I'd like to hear your thoughts. Do you think the dollar can bounce back, or are we watching the beginning of the end of U.S. financial dominance? Drop your comments below. I'd love to read your perspectives on this. Let's step back and look at how this affects ordinary Americans. Because this isn't just about bond markets or foreign reserves, it's about your wallet, your bills, and your daily life. Prices for essentials are climbing steadily. Small businesses are squeezed by higher costs. Supply chains that used to work smoothly are breaking down. Families are feeling the pressure. A recent survey found that more than 1 in 4 Americans are now spending more than they earn. Credit card delinquencies are climbing, auto sales are plunging, and even retail, the backbone of American consumer strength, is faltering. People are cutting back to the basics: food, fuel, medicine. Everything else is taking a back seat. And here's another harsh reality. The cost of America's debt itself is ballooning. Interest payments now total over $1.1 trillion a year, about 1/3 of all federal revenue. Imagine earning a paycheck, but 1/3 of it immediately goes just to cover past borrowing. That leaves less for investment, for infrastructure, for the future. Credit rating agencies are paying attention. Fitch has already downgraded America's credit rating. warning about unsustainable debt and political dysfunction. And the International Monetary Fund has issued a chilling alert. The US could face a refinancing shock, meaning it might soon struggle to roll over its debt at reasonable costs. With over $1.6 trillion in bonds coming due this quarter alone, the stakes couldn't be higher. Meanwhile, gold is surging. Prices have smashed through $3,500 an ounce, the highest in history. Central banks are buying at record levels. China added 50 tons in a single month. Poland has boosted gold to nearly 20% of its reserves, and the BRICS countries are settling trade deals without the dollar. The shift is happening fast. And here's something often overlooked. China still holds over $750 billion in US debt. That's not just money, it's leverage. If Beijing decided to dump even a portion of those holdings quickly, it could send US borrowing costs soaring and shake markets around the world. On top of that, China controls nearly 80% of the world's supply of rare earth minerals, critical for everything from smartphones to satellites to advanced weapons. That grip gives Beijing enormous power in any confrontation with Washington. While America has been focused on short-term fixes, China has been playing the long game through the Belt and Road Initiative, building trade networks and financial systems that bypass the dollar. In many parts of Asia, Africa, and Latin America, the dollar simply doesn't dominate the way it used to. So, are we witnessing the end of dollar hegemony? It may not collapse overnight, but the decline is accelerating. The world is moving toward a multipolar system where no single currency has absolute control. Instead, power will be shared across regions, gold may return to greater prominence, and digital currencies could even play a role. The big question is, how should America respond? Policymakers need to get serious about fiscal responsibility. Debt cannot keep ballooning forever. Trust with allies must be rebuilt. Investment in technology and innovation has to accelerate if the US wants to stay competitive. For investors, the message is clear. Diversification is key. Relying on the dollar alone is becoming riskier. Gold, alternative currencies, and emerging markets are worth serious consideration. And for ordinary families, financial prudence matters more than ever. Saving where possible, cutting unnecessary debt, and staying informed about these global shifts can make a real difference. We are living through a turning point. The unraveling of dollar dominance is not just a financial story, it's a geopolitical one. It will affect trade, alliances, and the balance of power for decades to come. The world we've known for the past century is changing, and the choices made now by governments, by businesses, and by individuals will shape the next era of history. So as we close, let me leave you with this. The dollar story isn't over, but its next chapter will be very different. It's not just about charts and numbers, it's about power, influence, and the daily lives of billions of people. The question is, who will adapt, who will resist, and who will lead in the world that's emerging? Thank you for watching. If you found this valuable, please hit like, subscribe to the channel, and ring that notification bell so you don't miss future analysis. And truly, thank you for spending your time with me today.